Edison has just initiated on Endeavour Mining, and Endeavour Mining is the second best performing of 30 international peer group gold miners. And do we think that makes it expensive? It's up 200% over the course of the last 3 years. No, we don't, and this is the reason why. For a start, we think that Endeavour 3 years ago was undervalued, and secondly, and this is really the most important part about its history, is that in late 2015 it went through a very major reorganization. Now, prior to that, the old Endeavour had been on an acquisition spree, a buying spree. It had done a lot of corporate activity, it purchased a lot of assets, and it was groaning under a burden of debt that was depressing its equity price. And the key really is that at this point, Endeavour did a deal with a group called La Mancha. Now, this was a private vehicle. It's a family office mining vehicle, and essentially La Mancha injected the ITI asset into Endeavour plus $63 million and injected new management. And that was absolutely key because new management entirely changed the direction and strategy of the company. And now if you look at the company, it has 5 mines. It's just about to sell one of those to make it 4, and it's operating in 3 countries in West Africa. It's operating in Mali, in the Côte d'Ivoire, and also in Burkina Faso. And for those who know, for the geologists amongst you, you'll know that this is the most exciting area probably in the world today in terms of both exploration, gold exploration, and also gold development as well. Now, I said that Endeavour was just selling one of its mines, Tabakoto, which it announced in the 3rd quarter of this year and will close in the 4th quarter of this year. And that is almost the last piece in the jigsaw puzzle of reorganization. And now if you look at the company, there are 3 legs to its strategy. One is that it should have an all-in sustaining cost of less than $800 an ounce. 2, that it should have an operational life across all of its assets of at least 10 years. And 3, that it should have the potential to produce 800,000 ounces of gold a year. So a very, very major producer indeed. Now, as it's got to this point where it's sold Tabakoto, so that's the last, if you like, of its high-cost assets, what we're looking at is we're looking at a company which is underpinned by its Houndé asset, which is now transforming its ITI asset from previously it was a heap leach operation into a carbon in leach operation, and then growth potential coming through from the Kalana asset, which it acquired with Avenel last year. And this is, if you like, the catalyst to meet those 3 strategic targets. So AISC less than $800 an ounce, and production approaching 800,000 ounces a year, and production visibility for at least 10 years. Now, so at the same time as they're doing that, what they're doing is they're now embarking on a major organic growth program. Now, this involves spending $45 million a year on exploration, and over the course of the next 5 years, they expect to find of the order of 9 to 15 million ounces of gold. Now, that could increase the life of their mines, we estimate, by anywhere between 5 years and 17 years. So at the same time that we've got cash flow doing that, because of the new mines and the low-cost mines that they already have in their portfolio, and the new mines they're bringing online in order to augment that, we got cash flow going up, and at the same time we have this exploration program going on in order to find these answers. And the idea of that is to make these mines effectively sustainable at these sort of metrics indefinitely. So cash flow up and then flattening off. Now, where's it going to flatten off to? Well, we reckon somewhere north of $3 a share. So if we put that on an X growth multiple and effectively say, well, they maintain that $3 a share ad infinitum, or certainly for a very long time, then what is the value of that if we discount over at a rate of 10%? And the answer is it's worth about $33 US in 2022. If we discount that back to present value to the beginning of 2019, it's worth about just shy of $30. $29.76 is the figure that we have in the report that we've got. And if you compare that to the share price at the moment, which is a little bit over $16, you can see you've almost got 100% upside there. If you want to translate that into IRR terms, if you bought the shares now at $16, you sold them in 2022 at a price of $30, then that you're looking at a 30% return in US dollar terms. I'm talking round figures here, over the course of the next 4 and a bit years. So that's why we like Endeavour. The report is there on our website. Please enjoy it, please read it, have fun, and we'll be back with more such opportunities as soon as we can.